Hey everybody, this is David Skrika, stock chart of the day. So first thing I'm going to talk about is kind of the service going forward. And I hate to do another name change, but I'm having my I'll show you this quickly here. I'm having a new book coming out in January, and it's all about that kind of maximum pessimism, Templeton type investing, which I have to admit, I did not even um practice as much, being so much involved in the mining sector. And I look at all the trades that I've made over the years. And I participated in them, but not as large as I should have. Tata Motors in 2009 at 350 a share went to 35. HL Toy and Hello Telecom in 2012 at $1.40 a share went to $8. The Russian stocks the day they bought them in 2014, and they went up 50, 100% in the next couple of years. So I look at all these kind of trades and I'm like, I kick myself that I wasn't more involved with them and I was like too focused on mining. So, but I still believe in that form of investing. I'm doing it a lot more, as you know, with Fubo and companies like this. So this comes out. And I just recently purchased, you can see January 7th. Just recently purchased maxpessinvest.com. So what I think I'm going to do is I'm going to make Stock Charter today a segment of the maxpessinvest.com. So it's going to be maximum pessimism investing or something like that. Or I'm going to call it like, profit from pessimism, something like that. And yeah, but and I like that ring to it, Max Pess Invest. It's a cool name. And then I also like the fact that, my whole theme when I was addicted to profits was I loved Robert Palmer. I loved Addicted to Love. He ended up, I moved to the Bahamas. He recorded that song in the Bahamas. So I had this little synergy here. And then, John Templeton did all his work from the Bahamas, and having, again, that kind of synergy with Max Pest Invest. I really like that. So Stock Chart of the Day will probably become a segment or kind of like an offshoot or part of, I should say, maxpessinvest.com. So I thought I'd just show you that, etc. So this is, so today's topic is going to be the Fed pivots. So the Fed pivoted. They finally did. They've been talking. People have been. I remember people started talking about them pivoting in 2022, and I was like, no way. Rates are going much, much higher. And all through 2023, people talked about it when they essentially ended rate cuts and this year. But now it looks like they finally are going to pivot. It does look like more because the markets have rebounded, like a quarter point cut in September. But there's still actually like a 2/3 chance by the election there being 75 basis points. So we're seeing this in the obviously reflected in equity and commodities markets. You can see gold recently hit a few days ago a new all-time high, was up again and good on Friday. So, on basically the news of the pivot, everything was basically green Friday. I talked about recently about maybe the S&P seeing a V bottom. That really looks like the case now. This is a classic V bottom, and we're almost back at the new highs. So, can we, again, the stock market cap to GDP again is hitting highs, but look at the all-time high in that was 150% before 2020. And in 2021, it went to 200%. So who's to say we can't go to 220 or 230% this time? If we did that, I'd be scared, crapless. Something bad was going to happen, but that could happen, especially with the Fed in a loosening mode. So we're going to look at this SLV. So we'll see silver. Silver looks, it was up here too. Can we break here and go back to the highs in silver? I hope so. I never thought silver would go below 30 again when it had this move up here. So, but it did. This is SLV's, not the actual silver price, but hopefully that's about it. And then, of course, we'll quickly look at the gold equities. This is just kind of an overview to show you. You can see the gold equities, again, basically broke out to new highs here and are right near the highs. So we're essentially seeing everything kind of move higher. Now, the thing that is kind of lagged, I talked about the Magnificent Seven kind of like lagging recently. And you can see that NASDAQ 100 is kind of lagged. But it was going up so fast and it got hit harder in this correction. But you can see here, it's still about 20 points, the QQQ, or 4% below its highs. Or you can see the S&P, gold, everything else at its highs. But it does look like they're starting to price everything in. Now, what will be interesting would go with the election, because it's neck and neck. And Harris has very anti-growth policies, probably the most socialistic policies I've ever seen of a presidential candidate. Outside if you consider Bernie Sanders running for the Democrats, but of course he never was a presidential candidate. And she's talking about doing unrealized capital gains taxes, and raising the capital gains tax into the 45% range. So this could be the kind of thing where, like, if it looks like she's going to win, maybe that's the trigger for a market sell-off, because you're going to want to sell your stuff. First of all, unrealized gains means you might have to sell a quarter of your stocks just to, pay that unrealized gain. And the problem with unrealized gains is, like, when do you start it? Like, and then what happens? Like, you have a 25%, unrealized gain, say, in a stock that's up thousands of, or, up hundreds of percent. And let's say that stock drops a lot. Well, you paid that gain and then you end up losing money anyhow. So it's a terrible idea, but anyhow, so maybe that will be like part of the trigger. I don't know. I think either way, I could see the market topping around the time of the election, because with Trump wins, it will top, because it'll be kind of almost the opposite to 2016, because everyone thinks he'll be, it's going to be this huge boom and growth and etc. So maybe it will top then. Or with Harris, it could top again because of her anti-growth policy. So, but I just kind of foresee this. But again, with the shakeout we talked about in the VIX, with the Fed looking like they're going to loosen now, I do kind of see this strength continuing. And look at, me, I was very, very cautious and bearish just a few months ago before that sell-off. But again, I do take that VIX spike, because that was such an extreme spike, with kind of a grain. Like, it's just usually when you get a spike like this, you're not going to spike right back up a month or two later. So, like, that kind of happened in 2018. We'll just quickly go back to 2018 when you had that spike, and we're going to get an 8-year chart so we can see it. You had that spike here in 2018, and then you can see the VIX went down and the rally market went up until October. And then there was another spike during the bear market in the fourth quarter. So that's kind of what I think here. When you get a spike like that, it's like you're going to continue to go lower for a number of months, and then you probably won't see a significant sell off for a while. So that was 6 months. So this happened in early August. So that could take us into, if nothing's gonna be exactly the same, but let's say that takes us into early next year, maybe, and then we start to see a big rollover. Maybe the economy really does roll over, the Fed rate cuts don't work, and then we'll have to see. And I know they reduced the jobs numbers. So that's a sign that the economy is nowhere near as strong as it's been saying. I'm always suspicious, because, like, look, I'm not a conspiracy theorist. I never was by any means. But when I see how the media is pushing for Harris and was pushing for Biden, I was very suspicious that those numbers were being used to make the economy look better than it was in the election. I was always wary of them, because I always thought, I was reading all these articles that all the big tech companies were laying off people, and tech companies, like those people make a lot of money. And then there's this trickle down effect where you make a lot of money. You go to a restaurant, you spend money. You renovate your house. You buy a new car. There's all this trickle down effect, and all of a sudden, these jobs where people are making $200,000, $300,000, $400,000 a year are gone. That takes that money out of the economy. And what are those people really going to do next? Like, they're probably have to take a job that pays themselves, a quarter of that money. So that really hurts the economy, and then that will affect the jobs down the line. The waiter at the nice restaurant, the car dealer, etc. So I was always wondering, like, how can they, how come this is not having the trickle down effect? And now we're seeing it is. The jobs growth is nowhere as strong as they think. And that's another reason the Fed will cut rates. But for now, we're going to talk about the theme of today was we're looking at these. We're going to quickly look at the IRX, which is the 3-month T-bill, and you can see that has started to come down in yield. For the first time, you can see it relentlessly went higher from 2022, but now we can see it kind of from late last year has been moving lower, but really lower here. And this is already starting to price in a 1/4 point cut. So that's basically it for today. Actually at 550, you're kind of basing in actually 38 basis points. So that's 50-50 essentially. It's basing in maybe a 50 basis point cut. So that's it for today. Fed pivots. Looks like we're going to continue to move lower. And tomorrow, what we'll do, I'm going to put this out on Sunday. And on Monday, we'll talk about the effect this could have on the US dollar. Okay, everybody take care, and I hope you enjoy Stock Chart of the Day.